Galaxy Digital CEO Mike Novogratz expresses a high level of optimism for crypto assets in 2024, attributing it to two significant factors: the macro environment and increased adoption. Novogratz sees the introduction of spot Bitcoin ETFs as a game changer, opening up a vast world of wealth worth tens of trillions of dollars within the traditional finance realm. With the ETFs receiving approval from the U.S. Securities and Exchange Commission, Novogratz anticipates sustained demand for Bitcoin throughout the year and beyond, particularly from older generations who previously harbored misconceptions about cryptocurrencies. Additionally, Novogratz's bullish stance on Bitcoin and digital assets is fueled by the gloomy macroeconomic conditions prevailing in the U.S. and globally. He points to irresponsible fiscal and monetary policies worldwide as catalysts for Bitcoin's continued price appreciation. According to Novogratz, Bitcoin serves as a barometer of fiscal stewardship, with its value reflecting the credibility of countries' fiscal policies. Speaking at the Bitcoin Investor Day in New York, Novogratz discussed various topics, including his reasons for entering the crypto space, regulatory concerns, the impact of spot Bitcoin ETFs, and how the challenging macro environment is driving the cryptocurrency industry's growth.
Ever feel like you're wasting your money on things that don't really matter? Stop. You don't have time. Don't miss out on this 2025 bull run. Educate yourself now. Don't spend $12.50 on junk. Educate yourself on how to be successful in crypto using our crypto cheat guide. Unlock the secrets of crypto and make smarter investments today. Visit the website now on the link in the description for your exclusive copy. Start your journey to crypto success today.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
Bitcoin is a macro asset. Like, what got me into Bitcoin in 2013 when it was trading at 98 bucks was somebody called me and said, look into this thing. And I was like, macro asset. And I was a macro trader. At that point, the story was inflation was coming, right? We had 2012, the European financial crises, and everybody was worried about inflation. It's funny how the consensus can be wrong sometimes. Paul Singer, anyone who knows Paul Singer, he might be one of the greatest investors of the last 30 years, runs Elliott Advisors. Tough son of a bitch. He took an ad out in the Wall Street Journal and the New York Times wanting Ben Bernanke, the chairman of the Fed, to go to jail for what he was doing with QE2. Not kidding. And it was signed by 50 really intelligent people. They were so worried about inflation. And so that's why I thought, oh, you buy a Bitcoin, it's got an inflation hedge. China was buying it. There were a lot of people that had lost faith in governments, right, post-financial crises. And so I was like, macro asset, buy some. And I remember looking at the chart and saying, this thing's going to go to 1,000. And sure enough, it went to 1,000. Matter of fact, I was on the cover of the FT, the only time I've ever been on the cover of the Financial Times. When I was at a conference like this, I didn't know the press was there. And I said, Bitcoin's going to go up because this, and this, it's going to go to 1,000. And August 2013, you can find it. There I am. And then it went all the way back down. I got hooked with this idea that it was the first asset that started from the little people. Right? It wasn't an institutional asset where at the end the taxi cab driver buys it and it's time to sell. It was a global revolution, and it was the first global asset, right? In 2017, when we had that great bubble, that was fun, right? It was more of an Ethereum-led ICO, Bitcoin to 20,000. I remember saying over and over, like, this is the people's revolution, right? Mr. and Mrs. Watanabe in Japan, Mr. and Mrs. Kim in Korea, people in India, in Africa, in Nigeria, all over the place participating. There are no global markets, really, right? Gold is a global market, but in the 1999 tech bubble, that was a US bubble, right? There was a few people that participated in outside, but broadly Japanese people buy Japanese bonds, right? And so here's the first global asset, and it was, people driven. And so I started this way, way early, this tagline, the herd is coming. And, boy, did I feel silly for years. I was talking about the institutional herd, right? I was one of the first institutional guys, me, Dan Moorhead. There were a few of us to start telling the Bitcoin story to institutions. And most of them just said, oh, that's really interesting, close. A few intrepid, you guys had Fairfax County, got in early, but very few institutions did. And so I look back, if I made a mistake in my Bitcoin journey, it was probably building an institutional business when I should have started with retail. because it really was a people's business. Wall Street beats you up and wrings you out and slaps you in the face over 25 years, but you'd like to think you gained some wisdom. And most of the crypto community was young, at times naive, full of big ideas, sometimes silly. And I thought I had some role to play at trying to bring some wisdom to this community and trying to get the older, stodgy crypto institutional community to understand it. And so it checked all my boxes.
Despite the remarkable success of the spot Bitcoin ETFs, U.S. regulators, particularly the SEC under Gary Gensler, and anti-crypto figures like Elizabeth Warren, remain staunchly opposed to the industry. However, Mike Novogratz anticipates that the anti-crypto sentiment will persist throughout the year but expects a swift change following the November elections. Novogratz emphasizes that American citizens have voiced their preference for Bitcoin, as reflected in the ETF's performance, urging the administration to acknowledge and act upon this sentiment by passing favorable crypto legislation. In a recent post, Novogratz underscores the need for regulatory clarity in the cryptocurrency space, a stance he has advocated since at least 2021. He believes that increased regulation would instill confidence in institutional investors, driving further adoption of digital assets. Despite being an unpopular opinion within crypto circles, Novogratz asserts that regulation is crucial for attracting institutional participation in the crypto revolution. During discussions with Anthony Pompliano, Novogratz also highlights how irresponsible governmental policies contribute to Bitcoin's increasing popularity amidst the prevailing macroeconomic environment.
The two vectors have always been macro, right? Why Bitcoin, right? And so that's the same broad story as gold, silver, other hard assets, and adoption. So right now, adoption's way overwhelming because we've just tapped into, so here are the numbers. There's $84 trillion of wealth, owned by US baby boomers. Baby boomers are broadly 60 to 80 years old. They are entering into their die-off phase. They broadly invest through registered investment advisors. You call your broker at, Dean Witter or Morgan Stanley or AJ Edwards and say, hey, what's my portfolio? Put a little bit here. That is the ETF process, and it has just started. And so early, big adoption, a lot of the smaller platform regional brokers have been buying, but a lot of the big platforms like Morgan Stanley, and they're still not selling yet. They're going to. They're getting prepared to. You can buy it on their platform, but the salesmen aren't selling it. One thing I learned about Bitcoin, it's always sold, it's not bought. Somebody sits down and explains it to you, right? What's the macro story of Bitcoin? It's relatively simple. Our government can't keep its pants on and is spending too much money. And when you spend more money than you take in, you depreciate your currency. That went from a problem in the early 2000s, 2007, 8, 9, 10, 11, 12, to a crisis with Donald Trump, right? And then Joe Biden. Trump and Biden will go down as the two presidents who destroyed our fiscal stability, right? Trump raised government spending a ton before COVID. And then when COVID happened, it was, let the dogs out. Biden came in and said, now I've got this cover to run my progressive agenda that helped me get elected. And I'm doubly panicking on the COVID, relief. And so we went from, and this is a little nuanced, but it's important to understand. We went from a government that believed at our core that the federal government is allowed to spend 20% of GDP every year, and we try to tax 20%. My first job in life was working at the Office of Management and Budget under Ronald Reagan, 1984. And I learned that. You tax 20, you spend 20. We did it 1 year, 1999 with Bill Clinton. Since I've been post-college, the budget has been balanced 1 year in America, right? But we got close, 2% deficit, 3% deficit. We're now running structural 5, 6, 7% deficits in a good economy. right? Keynesian economics says you're supposed to run deficits in a bad economy and run surpluses in a good economy. We've normalized spending 25% of GDP on federal government. That's this year's budget, next year's budget, the following year's budget. That happened like this. It happened between Trump and Biden, and that's insane. If you take the Congressional Budget Office's predictions, which are always rosy, right? They always are more optimistic than they should be. In 25 years, it has debt to GDP at 250%. Like, that is a recipe for housing prices going higher, Bitcoin going higher, gold going higher, silver going higher. And until you see a government, both Dems and Republicans, that say enough, we are going to go back to a Simpson-Bowles balanced budget amendment. We are going to cut spending from 25% back to 18 or 19%. Bitcoin is going to keep going higher.
According to data from the U.S. Treasury Department, the U.S. national debt has ballooned by over $1.6 trillion since it first reached $33 trillion in September 2023. Presently, it stands at $34.6 trillion, with a staggering $1 trillion increase occurring approximately every 100 days and $10 billion being added daily. This alarming trend reinforces the conviction of sound money advocates like Mike Novogratz that Bitcoin prices will soar significantly in the coming years. Unfortunately, most politicians worldwide, barring a few exceptions such as Argentina, remain resistant to the reforms necessary to rectify the situation. Instead, they persist in debasing fiat currencies and weakening the financial system until it inevitably collapses. Novogratz addressed the dire situation in the U.S. debt crisis in another post, advocating for drastic cuts in government spending, increased taxes on the wealthy, and the closure of loopholes to avert a debt death spiral. He emphasized the urgency of these measures, given the current trajectory of the debt, which is projected to escalate further. In this environment, it becomes increasingly persuasive to invest in Bitcoin and other hard assets as a hedge against currency debasement and economic instability. Share your thoughts on Mike Novogratz's assessment of the macroeconomic landscape and its implications for Bitcoin and crypto adoption in 2024 and beyond. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.